Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to briefly talk about the TransAlta Renewables Stock, as its stock price collapsed today by more than 12%. I published a video about TransAlta Renewables almost 9 months ago and analyzed the stock in detail. In that video I discussed the risks associated with investing in this company, and this is a short clip from that video. Unfortunately, there are many risks associated with this company and this stock. The first one is operational risk. As I mentioned before, the wind turbine incident in New Brunswick caused a lot of uncertainty for investors about other wind farms of TransAlta, as they may have the same foundational and structural issues which could lead to other incidents in the future. Another risk is lack of growth. The company has plans for growing the business, but the growth history of TransAlta Renewables does not agree with the management. Lastly, I don't think the dividend is that safe, as the cash flow of the company actually shrinking in the last couple of years instead of growing. As I mentioned in that video, and as expected, TransAlta Renewables has a real issue with cash flow, profitability, and lack of growth. This is their latest earnings report, and you can clearly see that all of their main metrics are down or stagnate year over year. Their renewable energy production was equal to the last year. Their cash flow from operating activities and free cash flow were down year over year. So here it is obvious that the company is not growing. If you're looking at the income statement of the company, you can see that year over year, their operating expenses and interest expenses are actually growing fast. So not only they couldn't grow their cash flow, but also their profitability declined over time. And this puts so much pressure on their balance sheet. This quarter, they had 22 cents per share in free cash flow, and they paid 23 cents per share in dividend, which means their payout ratio is over or really close to 100%. At the time of publishing that video, TransAlta Renewables stock price was around $17.5 per share, and I discussed the valuation of the company and concluded that the stock was overpriced and overvalued by almost 52%, and the fair value of the stock was around $8. Just see a short video clip from my valuation of TransAlta Renewables. If I expect a 10% return on my money from this stock, the fair value of the company is 8.30 Canadian dollar. Which means compared to the current share price of almost 17.5, the shares are traded at 52% premium. And it is absolutely not a buy according to the model. As the company was not able to grow their cash flow in the past couple of years, and they had major issues like the crack on their wind turbines, they couldn't really reinvest in themselves. And they were not able to acquire new facilities, develop new power generation facilities, hire high-end developers and engineers, and therefore now they have issues to even pay out the current dividend. You can imagine that in this situation, which is very tricky, with rising interest rates and more interest expenses for the company, the management team should probably reduce the dividend at the moment and focus on paying down the debt and reinvest the cash into the new projects to be able to grow and eventually increase their dividend again with a healthy balance sheet in the future. But the management team at TransAlta thinks otherwise. This is the statement that the management team at TransAlta Renewables issued today. Our 2023 outlook highlights resilient cash flow expectations with a payout ratio of approximately 100%. We are expecting to bring on new renewables and transmission assets in Australia in 2023, along with a return to service of our Kent Hills facilities in the latter part of the year. As we look ahead, our near-term objectives will focus on dividend sustainment by focusing on growth opportunities that manage our tax horizon while retaining the dividend payout ratio desired by our income-focused investors. This is terrible for me, in my opinion. They basically want to sacrifice growth and risk management for sustaining the dividend at 100% payout ratio. Some shareholders are happy that they did not cut the dividend, but in reality, you should be pissed. The dividend doesn't matter if the underlying business has operational risks. Just assume if a few of their energy generation facilities, like the other wind turbines, have more problems during this year. What will happen then? Their payout ratio can go much higher than 100%, and they have to dilute you or take on more debts or just pay just cut the dividend. Dividend doesn't matter if the cash flow of the company is shrinking and your shares worth less and less over time, if they pay you 7% dividend, but they dilute you by 10% every year and the share price decline by 10% every year, you're not making 7% in dividend, you're losing 3% of your money each year. This is what the management team at TransAlta Renewables tells you, and I definitely don't want to invest my own money in such a company. Is it possible that TransAlta Renewables can sustain its dividend and eventually they can generate a bit more cash flow by their new assets? Of course, yes, it is possible. But is it probable? I would say no. They probably cannot increase their cash flow significantly by next year or even in the next 2 years. You're taking on a huge risk with a very little upside at this point. In the best case scenario, they will be able to continue to pay the dividend and bring down the payout ratio to something like 95% by next year, so you can get a return close to the market average. In the worst case scenario, their expenses continue to grow and their cash flow will stay the same or even goes lower than this. And they have to dilute you or take on new loans or cut the dividend because they have to. This is another high risk and low reward investment in my opinion. There you are guys, I hope you enjoyed the video and I will come back with a new stock analysis video soon, but until that time, I see you guys in the next video. Farewell.